Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms such as our 21 SPY and ES reversion and mean systems like you see here, and of course our very popular KISS trend following systems which we apply to I think over 700 indexes and stocks. It's an amazing thing that's exclusive to Breakpoint Trades. You should check it out. And it's in the systems section under KISS STS tables. Okay, so let's go and get started. This is going to be my comprehensive state of the market analysis for August 27th, 2023. It's Sunday evening. This is our back-end recorder for our standard web page newsletter. I'm going to go ahead and get that started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a nice weekend so far. It's Sunday early evening. It's about 6:40 p.m. and this is the comprehensive newsletter from Breakpoint Trades for August 27th, 2023. Again, hope everyone had a nice weekend. All right. And also, normally my newsletter would be coming out earlier, but I have some big technical issues with my computer. In fact, I think I got a virus on my laptop, which means I'm going to have to, not going to be fun. I'm going to have to completely wipe it out and get a backup computer going. Not fun, but I have to deal with it. But anyway, that's why the newsletter is coming out here a little bit later. So again, as far as this newsletter, again, it's August 27th, 2023. If you happen to be new to Breakpoint Trades, these weekend newsletters are very extensive. We cover all the markets in depth. It takes anywhere from 40 minutes to almost an hour. Okay, we really dive into the charts. Anyway, there's a six table of contents here. Same general theme as we always keep. We'll discuss opening comments on the market just like we're doing now. We're going to go over various systems such as our reversion and mean systems, which closed out some nice winning trades last week, and our KISS systems. Then we'll move on to the general market analysis. We like to do a comprehensive top-down approach on the major indexes, the S&P, NASDAQ, Russell 2000. We'll also look at various custom indicators such as the VIX, the NYMO, McClellan oscillators, things like that. Then we'll look at bonds and the 10-year Treasury yield, which is in major focus, obviously. We're going to do a broad sector overview. We'll also look at the US dollar, various currencies, commodities, precious metals, and GDX. I got a bunch of write-up here, and I suggest you read that when you have time from the standard webpage newsletter. You can also pause the YouTube video, but I'm going to go ahead and just get started with, instead of reading all this text, I'm going to go ahead and get started with the rest of the newsletter, and I'll be making these comments anyway. Next, item number 2 shows the index sector table, what transpired on Friday and of course last week. As you know, the markets were up on Friday, reversing some of Thursday's sell-off. Not all of it though, more of an inside day. Anyway, for the week, the indexes, major indexes, ended up bifurcated. Both the Dow and Russell were down, while the S&P was up 0.8%. NASDAQ area up anywhere from 2.25% to 1.7%. As far as the major market sectors here, we follow 21 sectors, kind of a broad mixture of up and down. A few more sectors were down than were up, as you can see. Banks lost over 2%. Energy was weak. That's been a stronger sector lately, but it finally gave something back. Technology bounced back quite a bit. Remember, it was very oversold. XLK up 2.3%. Retail getting knocked out. That was the weakest sector, down 4.4%. Metals and mining. And moving on, currencies, US dollar up a big 0.8%. That's been another issue with the market, and especially precious metals area. Very strong dollar, especially with those strong interest rates. Long term, obviously, I worry about the dollar losing dominance, but at the moment, it's still the best. Flea on the dog is one of those statements. Cryptocurrencies were mostly down for the week, as you can see. Commodities, more were up than down. The index was up 1%. Crude oil lost 1% for the week. Natural gas up 4.2%. Copper up 1.5%. Agriculture done well. The Precious metals finally had a bounce back. Gold up 1.3%. GDX, the miners, up 3.5%. You always want to see the miners lead relative to gold, and they did last week. It's a start, but again, this area needs a lot of work. And silver up an impressive 6.5%. It's more volatile than gold. And as far as the 10-year Treasury yield, it was actually down last week. Remember, it tagged horizontal resistance, pulling back. My concern, though, is it just going to pull back, form some sort of handle, and eventually break out as the chart suggests. So we'll see. Next. Item number 3 shows the economic news calendar for this week. So being as we're going to be heading into September on Friday, and remember, on the first week, Friday is always the jobs report. So Friday is the big jobs report. Tons of other news here. Housing price index on Tuesday. Consumer confidence. Home Schiller price index. Bunch of retail data. GDP on Wednesday. Of course, Thursday, initial jobless claims. PMI, that's a big one. Natural gas inventories. And of course, we're basically out of earnings season by now. Next, let's talk about our trading mechanical systems here. So last week, our reversion and mean systems closed out of some nice trades. So for ES, we had 2 subsystems were open. The QE Swing 3 had a first and second entry, and the S-Trap had a first and second entry. And they both closed out very profitable, something like $2,500 on those. Also, for SPY, I'll be using these subsystems going forward. You can see they would have been in similar trades. And by the way, on these reversion and mean systems, the average winning percentage is around 90%. So for example, that QEBT, that swing, I put the stats here. You can see profit factor of 25, 90.8% winning trades. Again, that's typical of mean reversion. They tend to have high winning percentages. Our KISS trend systems have much lower winning percentages, maybe around 60%, but that's typical with trend following systems, as they tend to hold trends for as long as possible and they get stopped out quite a bit more. Next. Image number 5. Here's our KISS trend systems for the weekly charts of the major indexes. Again, as you know, on the daily, all the daily indexes had stopped out a couple weeks ago, hit their smart trailing stops. But on the weeklies, they have still not done so. S&P's got a smart trailing stop right around 42.50. Triple Q's right around 342. Again, feel free to round these numbers down on the KISS systems. If there's 452, you might as well round that just to 450, stuff like that. You can see the moving average ribbons are pinching now, at least from a bullish configuration. So that does give bulls hope that we can have some sort of end of year rally. But like I want to state, I don't think the market is ready just to go back to the highs. The bullish cases were in some sort of wave 4 consolidation. The most bullish case would be the wave 4 consolidation is complete. I think what's more than likely is that we're still unfolding in this wave 4. Maybe we're in a wave B bounce. Next. Image number 6. Here's the daily view of the KISS systems. Again, these all stopped out a couple weeks ago, had nice winning trades. So these are all flat, as you know, if you've been following us. Again, coming into last week, into Monday, we were quite oversold. We had to mark 13s on the S&P and IWM, triple Qs. So everything was set up for a reversion and mean bounce, and that's what we got end of the week. We had that big sell-off on Thursday, of course, and then a little inside day, mostly on Friday. Next. Moving back to the standard charts, chart number 7, here's a monthly view of the 5 key major indexes. So as you know, so far, August has been a nice down month, around 3.5% for the Dow, 5.5% or so for the S&P. And again, markets so far following seasonality and following what we stated way back in the springtime. Back in the spring, Steve and I gave our thoughts that the market would hold up and rally throughout the summer into in through July, and then we likely see some sort of correction in the August time frame, and that's exactly what has transpired. Okay. Also, August and the first couple weeks of September tend to be your weak months, especially the first couple weeks into September. So my thought here on the market is that, you know, maybe, if we'll see if we can bounce up a little bit higher here, but I think if we do, then we're market set to pull back again into September timeframe before, we have some sort of decent trade low. Next. Chart number 8, here's another monthly view showing the major indexes, kind of a duplicate chart. Let's go ahead and move on. Chart number 9, here's a daily view of the 5 key major indexes. So again, coming into last week, into Monday, we were very oversold. You can see the S&P here was below its lower Bollinger Band. Same for the NASDAQ, same for the Russell. So we were set at least for a mean reversion bounce, and that's what we got. You can see S&P rallied back up, stalled at its 20-day moving average there. Also the 50-day moving average not shown on this chart. Same for the NASDAQ. The Dow really didn't bounce. It was actually down. Next. Chart number 10, here's the Dow Jones. Again, it's pulled all the way back to this uptrend line. That said, there is some positive divergence here on the 5-length RSI. So we'll see if this could produce a bounce or not. If you were to get a long trigger, easy stop would be, say, right at Friday's lows. Otherwise, we have to be cognizant that the 200-day moving average is just below here, this trend line. So if that's lost, that could easily just be tagged. We do have, again, a slight RSI divergence here. Next. Let's move to the S&P 500, our proxy. So here's the monthly view of the S&P 500 going back to the early 1990s. And overall, we're still in this big channel from the 2009 lows. We've had a heck of a rally from the November lows of last year and, of course, this year. One thing I want to mention here, guys, if the market does somehow manage to make an all-time new high, maybe late this year, early next year, look at the MACD on the monthly chart. There's going to be a huge MACD divergence set up that could set up for a much larger top next time. Just something to contemplate if the market does manage to go back and make new all-time highs. Next. Chart number 12, here's a weekly view of the S&P, again up 0.8%. So again, things have been playing out just like we said. Again, last spring we gave our thoughts that the market would rally up throughout the summer, which it did, and it basically went to the top of the channel that we had drawn and this resistance area, and that's exactly where it stalled out in late July, and it's pulled back and so far bounced off this demand zone. So far it has been playing out just perfect to our analysis. Also, the trend line in the 14 RSI, that's something to watch for a valid sell signal. You can see for now the RSI is trying to bounce off of it. You also have bullish MACD or a bullish moving average ribbon pinch at the moment. Next. Chart number 13, here's another weekly view of the S&P, shows you the same thing, the RSI trend line, moving average ribbon, how we stalled at these resistance areas. One thing to note is this potential time symmetry here. Hasn't been exactly perfect, but it's matched some of these previous highs and lows. And notice you have a little time symmetry low set sometime in mid-September. That would play out, again, perfectly with seasonality. So that is something to be cognizant of, that we've had in wave A down. Maybe we get if the market can hold last week's lows, maybe we can get a further rally up in a wave B lower high, then come down again. There's a big support around the low 4,200 area, 4,225, and then we get a rally up end of year. So that's probably one of my favored scenarios. But we'll see. We'll react to whatever transpires. We'll play it level to level. Chart number 14, here's another Renko chart. I haven't shown this for a while. This is our clean Renko chart. And you can see the Renko charts here, they really show these support and resistance levels in a very clean way. So clearly this area here, low 4200, 4225 was previous big support turned resistance. It's now big support, and you can see this area was previous resistance up around 4500, which is where we've pulled back from. Next. Chart number 15, here's another weekly view. This one has the pivots, and quite interestingly, in July we stalled at that R1 pivot. Notice that? You can of course see where the other pivots are. The next other pivot is below 4300. Next. Chart number 16, here's the daily view of the S&P. Again, we favored an up move, at least in this wave Y or 3. The most bullish case here, guys, is that this was a wave 3 up here, and we're working on a wave 4 consolidation. Again, if it is a wave 4, it cannot overlap the high of wave 1. Remember that. Okay, we still have room, but it's been a pretty good pullback. Anyway, great sell signal from that RSI trendline break, which occurred basically on the first couple days of August, which is just an excellent sell signal. This area here and the 43, low 4300s, you could see was previous resistance, which we broke through in June and back tested in June as big support. And we got pretty close to it last Monday where we bounced. This is clearly a big level, and so far we've held it. You can see on Thursday, price stalled right at the underside of the 50-day moving average, which we expected. We lost it. It is now resistance. Next. Chart number 17, here's a zoomed in daily view. Again, shows you, this channel where we stalled at the top of the channel there in late July. We pulled all the way back to through this demand zone. That's where we bottomed on Friday, right at this demand zone. And then we rallied up, stalled right at the 50-day moving average there, which we expected. Big sell-off on Friday, but it didn't really have much follow-through on Thursday. And then we bounced a little bit on Friday. Again, guys, short term, the key support is that low on Monday. That needs to hold. If not, then we're going to have another leg down. Otherwise, if we can hold this higher low, I think there's potential the S&P can work out to one of these higher, up to these higher fibs, 50% fib around 4470, 61.8 fib around 4500. So if we can hold this last low, if we can then work higher up to these fibs, then I think that would set up an excellent sell opportunity for then a pullback back into the September timeframe to set up a better bottom. Again, we'll play it level to level. Next. Chart number 18. Here's these wave counts. I haven't shown this chart for a while, but again, under the bullish case, this is some sort of wave 4 pullback. All right, and then eventually we'll make a new all-time high. The bear case would be this wave C where we put in a major top, which I don't necessarily support now, but definitely the fundamentals are potentially there. But right now, potential fourth wave. And again, it can't get too deep. It definitely can't overlap wave 1, but really fourth wave shouldn't go too deep. So I added some fibs here to monitor. Again, we'll see what this does, but so far this correction is playing out, in the typical week seasonality, August, and of course maybe September. Next. Chart number 19, here's the daily KISS trend system. Again, no changes here. Remember, KISS system for the S&P went long in March, and it exited there in early August, and is flat in cash. Okay, it's waiting for its next long opportunity. Next. Chart number 20, here's the 4 time frames we like to follow. Again, like I said, coming into last Monday, we were very oversold. Here's the daily. We had a DeMark 13, and we were set to bounce, which we did. Same for the half day. We had a DeMark 9 there. Moving average ribbons, I talk about this a lot. When they get too wide, you're due for a reversion of mean in the other direction, and that's what happened. We got that bounce from Monday into the late week, but then stalled at this ATR, that's resistance. Again, on the 130-minute, we pulled back, we broke the ATR, and we bounced off this ATR. So the bull's hope here is to hold this area, and then work higher, maybe in this wave B. So you really need to hold this area. If I were to have a long here and I was to have a stop, it would be, say, just below that low right there on Thursday. Next, chart 21, here's the half-day chart. Again, we broke that channel, as you know. One look, too, is also a head and shoulder pattern. But again, that would need to be validated. You'd need to break this 43.35 low. It is to be aware of, but otherwise, you know, it could be completely something else. Again, for now, we've bounced off the support zone. We'll see if we can hold this higher low, work a bit higher like I just showed, or if we just go straight down. Futures are up a little bit this evening. We'll see how they fare tomorrow. Chart 22, here's the 60-minute chart. And again, if we get that higher move in that wave B, this would be my target area, one of these fibs, and then after that come down again. Next, chart 23, here's the 30-minute chart with one of these wave counts. So again, one option is that we put in that little simple ABC on last week, and we're going to go right back down, all right, and make another low. The other case that I support a little bit more right now is this is still wave B. So this would be ABCX of A, wave B higher low, then up in C. Again, we'll see, guys. Next. Chart 24, here's the triple Q's weekly chart, again up 1.6%. Again, so far it's found some support of that demand zone there. Next. Chart 25, here's the daily triple Q's. Again, one thing to note is symmetry here. The largest pullback since the triple Q's bottomed, which was in October technically, the largest pullback was in December there of about 36 points. Okay, the pullback in February, March was 28.5. And so far, the pullback off the highs here has been just over 33 points. So we haven't broke it. While this is a larger pullback than the September or the one in March, it is not larger than that one in December of 36 points. So we haven't broken that symmetry. Again, we rallied up last week. So for now, we reversed off that 50-day moving average. 351.65 would be the 36.3 point pullback off the highs. Breaking this area would break symmetry. Okay, that would not be good for the bulls. You can see the moving average ribbon is bearishly stacked now. And it had the first pinch squeeze there where we pulled back from on Thursday. Next. Chart 26, another daily view of the triple Qs. Again, we broke that little steep downtrend line, rallied up, reversed near the 50-day moving average, pulling back. We're trying to hold this trend line. Again, the bulls' hope short term is to hold that higher low last week. Next. Chart 27, here's the KISS trend system on the daily. Again, just like the S&P, it went long back in early March, exited early August. Nice winning trade. It is in cash. You can see how price stalled near the ATR last week as a resistance. Next. Chart 28, here's the 4 time frames. So again, just like the S&P, coming into last week on Monday, we were oversold. The Mark 13, we bounced, stalled at the ATR on Thursday. Same on the 130-minute. We broke the ATR on the rally from the DeMark 9 to the DeMark 9 and a high. We're holding this ATR from now, so this higher low, let's see if we can hold that this week. Next. Chart 29, here's a 15-minute chart with some fibs. So these are areas to watch as well. Next. Chart 30, here's a half-day chart of the triple Qs. Shows that little potential head and shoulder pattern. Again, this would only be potentially valid if we were to start strongly selling off and taking out that last low. Otherwise, it could still be forming like the S&P. We'll see. This is a demand zone here. So far, we've bounced off of it. We also broke this little RSI trend line, as you can see. Next. Chart 31, here's IWM small caps, the weekly chart, down 0.35% for the week. It's into this demand zone. We'll see if it can find support here. Again, logical pullback from the upper coil trend line, logical rally from the springtime off the lower trend line. This could be a low risk area to take some of the IWM with a stop. Next, chart 32, here's the daily IWM. Again, really nice pullback from the upper trend line of the coil. You can see it's attempting to hold the 200-day moving average here. We've had little Pinocchio moves, candle wick moves below it, but so far continue to close above it. There was some RSI 5 divergence at the lows. There's demand zone, so we'll see if this area can hold or not. Definitely a nice, good over 50% correction from the top of that triangle pattern. Next, let's take a look at some of these big cap tech stocks, because let's face it, with the large weighting, these have such an effect on the market, such as Apple here. Basically has the strongest weighting on the NASDAQ on the S&P. So again, old hat, I've discussed this many times. Apple had a bearish break in symmetry in early August, as that was the largest pullback in the uptrend. So because of that, I'm looking for a lower high. I didn't think we'd make it down to the 200-day moving average on the wave A sell-off. Figured we'd put in a wave B, hot lower high. It's possible that that wave B is done again, but I favor maybe a further move up, maybe to test this 50-day moving average. If you do that and you start to get a reversal candle, that would be an excellent short, as I think Apple will then come down and probably test that 200-day moving average in September. That would be a good swing trade buy opportunity. Okay, and that also matches with seasonality and what I'm thinking on the indexes. Next, chart 34, here's the 2-hour view. Again, we had very strong MACD divergence on that 2-hour time frame. Good bounce. So far, the bounce made it to the minimum 38% fib. But again, if we can hold this higher low, I think we possibly can make it to one of these higher fibs, or the 50-day moving average on a daily, which is roughly around here, where the 200 is on the 60-minute. Next, chart 35, there's the big picture view of Apple. I've shown this before. One thing to watch long term is this trend line on the RSI. Breaking that would not be good. Again, each candlestick is in a month here, guys. This goes back to 2007. One hell of a move for Apple over time. You can see the pullback off the highs, bounced off the 9-month EMA. So that is your initial support. But guys, we do have a potential major MACD divergence on a monthly chart. Look how that MACD is not keeping up. That could set up a bigger top for Apple that could hold for quite a long time. Just something to be aware of if you're an Apple bull and you've been in a stock for many, many years. Next, chart 36, here's NVIDIA. NVIDIA, the AI craze, as you know, they did make a new high. I thought that pullback looked like a wave 4, and that's what it was. By the way, the KISS systems caught this trade. They went long back in, I think they went long in December, locked in 150% gain on this. They stopped out on the fourth wave pullback, which can happen on the KISS systems. Sometimes they get hit on those smart trailing stops get hit on the fourth wave. It is what it is, guys. Nothing's perfect, but anyway, it looked like a fourth wave. We rallied a new high, pulling back a little bit. Again, we're still over these moving averages, the 9, the 50, the 20, but we do have a big MACD divergence here to be aware of. So that could have been a little fifth wave high, and now this needs to go under a bigger consolidation. Next, chart 37, Microsoft. This still holds up very well. Another AI craze play. Here's your trend lines to monitor. This is actually Google, I'm sorry. By the way, the KISS system is still long Google and Amazon. Next, chart 38, here's Microsoft. So Microsoft, you notice you had a bearish break in symmetry there going into early August. So that sets the stage for potential lower high. You can see Microsoft stalled right at the underside of its 50-day moving average, to be expected. Next, chart 38, 9, another chart of NVIDIA. Duplicate chart. Let's move on. Chart 40, here's Tesla. I'm showing Tesla because should the market hold up this week and rally higher in that wave B, Tesla is set up here for a bull pennant. Now, this isn't a daily chart, guys. This is a 2-hour chart. But here I added a symmetry target. So target of this little pattern would be up around, I don't know, 254 or so. So could give you a little trade. Again, the market would need to hold up and rally, not, break down for this pattern to play out. Next. Chart 41 here is Tesla on the daily. Now there is some resistance up in here. 20-day moving average is your first resistance. All right, guys, that does it for the indexes. Let's go ahead and move on. Let's look at some of our custom indicators. Chart 42, here's the BP-SPX with the, it's kind of like a trend following system, has the 9 and 20 MAs. You can see your buy and sell signals are generated whenever the BP-SPX, that's the bullish percent index for the S&P, whenever it crosses these moving averages. It's not perfect, but overall it's given some pretty good buy and sell signals, and it went on a sell signal in early August, which was a timely exit. Next, chart 43, here's the triple Qs with the NASI with the 3 EMA trigger, and that also went on a sell signal in early August when it fell below its 3 EMA. So been an excellent signal, as you can see, just like those last two, the one in February and the one in August of last year. Next, chart 44, here's the NYAD, NYSE Advanced Decline Issues. This is the 10-day average. This gave a great early warning in July when you had a lower high here and a higher high in the S&P. You can see whenever these divergences show up, pay attention because many times it offers market inflections. Remember, guys, the benefit of being a subscriber to Breakpoint Trades, you can get the live charts to these instead of just viewing static images on a video. So that's a reason, if you're on YouTube, to add a membership so that you can get these live URLs and bookmark them in Chrome so you can check them anytime. Next, chart 45, here's the VIX. The VIX went on that buy signal when it closed back inside its Bollinger Bands over a week ago, and this did play out for last week's bounce. Nice decline on the VIX on Friday, as you can see. Next, chart 46, here's the VIX, which we already looked at, and the VVIX, that's the volatility of the VIX. And this is basically back to its lower Bollinger Bands. This is a potential demand zone where this could bounce off of. We'll see. So be aware of that. Next, chart 47, here's another version of the VIX, this wedge pattern. We always got to keep an eye on this, guys, because theoretically this wedge could still measure to higher places if the market just wants to sell off right now. And even if the market sells off into September after a little further bounce here, I think this wedge could still play out just because of the seasonality. Next, chart 48, here's the NASI summation index plotted as a cumulative plot. So what gave us big warning for a bear market in 2021 was this big negative divergence between the NASI and the NASDAQ itself. You can see really started rearing its head in the fall of 2021 before the market topped out. And you can see then we had that bear market in 2022. You could see how this declined. But look at the divergence here, guys. We've had a hell of a rally this year from the January lows, December lows. But look at this. While the NASDAQ has moved very strongly higher, this kept going lower. And in fact, it's curled back down again. What this shows you is the sheer negative breadth. Just a handful of tech stocks led the market most of the year. Next, chart 49, here's the comparison chart of the triple Qs to the TLT 20-year bonds. As you know, generally the tech stocks are very sensitive to interest rate movements and bond movements. You can see how correlated these two instruments have been. And then all of a sudden, in late March, the two diverged. The NASDAQ rallied very strongly while the 10-year went down. 10-year Treasury yield, or 20-year, the 10-year rate went up. Why did it diverge? Not sure. Main reason is because I think of the AI revolution going on. That caused a further spank in the market. And, remember the Fed did have a kind of a light form of QE So there was a lot of excess money in the system still, and it fueled into the NASDAQ stocks. But that divergence finally playing out here with the correction we've had so far. Next, chart 50, here's the PMO system. Haven't shown this for a while. This also went on a sell signal, basically first day of August. All right, when it crossed below this 66 level. It is now at 0%. It's oversold. It just needs a reversal up for a buy signal. Next, let's move to bonds. Here's chart 51, high yield corporate. It's still hanging in there. We want to keep an eye on this. The market is heavily correlated to high yield corporate bonds, so we'll keep an eye on this. Chart 52, here's the 10-year treasury yield. Again, so far, logical pullback from that resistance high, which was the previous October high. Again, could that be a double top? Possible. But man, this almost has a big cup and handle look, doesn't it? You know, logically we pulled back from here, but what happens if we just pull back a little bit and then break out? That's my concern with this 10-year. Next, chart 53, here's the monthly view of the 10-year. Now, we have rallied into a supply zone, but notice, guys, if the 10-year breaks out eventually over that recent high, it could easily fill this supply zone, and we could see the 10-year up around the 5% area. Something to be aware of. Chart 54, here's the TLT 20-year bonds. Again, they move opposite of the rates. Again, as you know, this broke down in early August from that channel, back tested it as resistance. Coming into last week, we were very oversold. You can see I had a reversion to mean bounce buy opportunity there. You had a wide moving average ribbon. So you could have triggered long there. I bought TLT there. Nice trade so far. Next, chart 55, here's a monthly chart. I've shown this before, but I do think this is something that could play out over time where we see TLT eventually go down to this demand zone and make this fifth wave low. That would likely drag the market down lower. Finally, chart 56, there's the 2-hour view of TLT. Last Monday I showed this as a falling wedge, and that obviously played out for a nice bounce. Next, let's follow up with the market sectors here. So chart 57, here's XLK technology. You did have a slight break in symmetry here, just a very slight one, about an 18.5 point pullback off the highs versus the previous 18 points. You can see the rally so far stalling at the 50-day moving average. Next, chart 58, here's semiconductors, rally also stalling at the 50-day moving average. Again, if we come down again, guys, this is your next big support level, 32.30. Next, chart 59, banks. They continue to be weak. Again, these rate hikes are not helping banks. Think about it. These banks have a lot of those bonds at 1% that they're holding on their balance sheets. Not good. Next, chart 60, transports. Again, had a heck of a rally in the June-July timeframe after breaking this trend line. I said watch the extended trend line here, and the price pulled all the way back to retag that on Friday, bounced off of it for now. You have a little 5 RSI divergence here. Could be a lower risk area if you felt like this is going to rally from here. Go long, put a stop right at Friday's lows. Next, chart 61, XLE Energy. This is the weekly chart, down 1.4% for the week. Otherwise, looks like it's setting up into a big coil pattern. I do like this area fundamentally. Next, chart 62, there's the daily. Still hanging in here pretty well so far, just a little 3-wave ABC pullback. Next, chart 63, oil services. They've pulled back nicely. Remember, oil services got into this supply zone. I said it was logical to pull back from there, and that's what it's done. I am looking for a buy opportunity sometime in this pullback because I think it could eventually fill this thin zone. Next, chart 64, here's the bullish percent energy index system. So this still hasn't given us a little sell signal short term. You can see still hasn't crossed this main MA. It is in overbought territory. Next, chart 65, home builders. We can see this short setup that we talked about a couple weeks ago played out nicely. Hope some of you guys got that. You had an initial big sell-off, bounce back to the 50-day moving average where you found resistance. And on Friday, we did make a new intraday low there. Next, chart 66, home builders, or this is materials. It's pulled all the way back to its 200-day moving average here now. We'll see if it can hold that or not. Chart 67, duplicate chart of home builders, but let's move on to our next chart, which is chart 68, real estate. We showed this rising wedge back in July, and that obviously played out. Again, we all know what's going on with the real estate market, with interest rates, with low inventory, etc. Next. Moving on to commodities, chart 67, DBC. This is the index. It was up 1% for the week. Again, the charts looked bullish for me for months. It bounced off the 200-week moving average out of this wedge, broke out of here, and it's basically been flagging. Now it's holding these moving averages. Next. Chart 70, here's the daily. Again, ahead you can see the wedge pattern that broke out, rallied up, regained the 200-day moving average, bounced off of it so far. The bullish view is you've had some sort of wave 2, wave 4 pullback here, and you're going to go up again. Notice your moving average ribbon was pinching. Next. Chart 71, here's DBC on the monthly. Again, the monthly view is you have a simple ABC pullback on the bigger picture. You know, if that dollar tops out and starts selling off strongly, we could really see commodities run here, and that would really screw the Fed on their fight of inflation. Next. Chart 72, here's crude oil on the weekly chart, down 1%, otherwise still holding over this pattern. Next. Chart 73, here's crude oil on the daily. Again, remember the 200-day moving average was its resistance, which was regained there in July. We've had a nice pullback from the August highs. We'll see if it can hold this area. I'll stay above the 200-day moving average. Your moving average is pinching on a bullish configuration here, some RSI divergence. Next. Chart 74, natural gas. As you know, it's been basing here now for 2, 3, 4, 5, 6, 7 months. Eventually, when this breaks out of here, I think it's going to have a heck of a run. Here's your ETFs, UNG and Boyle. FCG is the natural gas stock ETF. Next. Chart 75, here's a 60-minute chart of Boyle. I showed this on Friday. Boyle had a symmetry break here. It looked like it was forming a higher low, and I mentioned that, and then it rallied up on Friday. So if you're long this, you could probably have a tight stop right here. Next. Chart 76, here's FCG. That's that natural gas stock. Again, those are some ways to play an eventual breakout of the natural gas commodity. Next. Chart 77, copper. Again, pulled back off that upper trend line there and basically end of July, first day of August. It's below the moving averages here. It's downtrending. Next. Chart 78, DBA did indeed bounce off this uptrend line so far. That was a good area to take a shot long. Next. Chart 79, here's uranium. Again, we've been showing this for the last couple weeks. Started breaking out, and on Friday pulled back, held that trend line as support. Chart 80, here's the monthly chart of uranium, which I like. I've been showing this for a few years now. It's forming this big coil. You know, moving average ribbon was pinching, so you know this could eventually start another bull run. Next. Chart 81, here's Bitcoin. As you know, Bitcoin broke down over the last couple weeks. Right now, it's just chopping around from breaking that wedge. Next. Chart 82, here's Mara, one of the Bitcoin type stocks. Again, hell of a rally from this June time frame when we were bullish on it. And then it's pulled all the way back to this area, which is now a potential demand zone. So this is an area to watch for a reversal. You have some RSI divergence. Got a nice trend line on the 14 RSI. Got a black candle doji on Friday. Could be used as a trigger. It is a little interesting down in this area for potential bounce if the market holds in. Next. Chart 83, here's the evidence. This is a 2-hour chart. I always like to look for divergence on an intraday time frame if I'm looking at a daily. So we do have some MACD and RSI divergence on the 2-hour time frame that would, suggest the daily is near a bounce point. Next, chart 84, US dollar. This is the daily chart. Again, it was up for the week nicely, up on Friday. It's in a little supply zone here, but the dollar so far is still stubbornly strong. Next, chart 85, here's the dollar on the weekly. Again, it's rallied off that 200-week moving average all the way into this upper channel line. Then, guys, we'll see. Next, chart 86, here's Japanese yen. Quite interestingly, remember the Japanese yen in 2022 bounced off this big support zone going back to the 1998 area. I think that was the Asian crisis, if I recall. I think I just got out of college then, but no, I was out of college for about a year. But anyway, it bounced off there in 2022, rallied up, stalled at this area, which became resistance. It's all the way back to this area now again. Is it going to hold? We'll see. Next, let's move to gold. Chart 87. Here's gold on the weekly. Again, up 1.2%. It did stall out in April at that resistance area, which we expected. It's been weak seasonality. I do think eventually this is going to have a big rally and have its day. But so far it's been consolidating. We'll see if this is an ABC, if it needs to make a zigzag, or if it makes more of a coil. Next, chart 88. Here's another gold weekly chart. Again, you can see how this is played out. Logical correction from the late April time frame. This one has the GDX-GLD ratio. I drew the trend line here. Really need to see the gold stocks outperform here. So far they have not been. They've been underperforming. Next, chart 89. Here's gold on the daily. Again, nice pullback, logical bounce near the 200-day moving average. Again, I don't feel that is a good bottom unless this forms some sort of coil. You can see so far price stalling at the 50, 20-day moving averages. Keep an eye on your GDX-GLD trend line. Next, chart 90. Here's gold on the monthly. Again, the bullish view is you have some big cup and handle here. This is some sort of wave 2 pullback, and eventually gold's going to go up in a wave 3 of 5 to new all-time highs, which I favor. But again, is it ready now or does it need more time? I think it probably needs some more time. Next, chart 91. Here's the gold versus the Japanese yen. They tend to be highly correlated, and a lot of times the yen will lead. The yen is trying to lead down here. That's a little short-term negative. Chart 92, here's the gold versus the Swiss franc. Again, you can see how correlated these two have been. And again, a little divergence here as well with the Swiss franc weakening here when gold rallied last week. So a couple concerns just to watch short term. Chart 93, here's silver. This is the weekly view, up 6.6%. Again, the bullish view is a big inverse head and shoulder pattern. The bearish view could be this head and shoulder, but really you got more of a coil. So again, I don't think this is a head and shoulder, guys, quite honestly. I'm more interested in the coil here or the bigger inverse head and shoulder. Chart 94, here's silver on the daily. Again, rallied off that lower trend line. It's now rallied pretty nicely up within the pattern. Chart 95, there's the bigger picture view. This would be the bullish view if this eventually breaks up through here. Could start a heck of a run, but it's been consolidating here for 3 years now. Chart 96, GDX, gold stocks, as you know, have sold off since May. They've been leading down. Last week, they were very oversold coming into Monday. They got into this demand zone, a couple doji candlesticks. It was an easy area to take some of these for a bounce. But so far, that's all it's been, a bounce back to its 20-day moving average. Next, chart 97, here's the BPGDM. It has come down to 17.8%, so that sell signal back in early May was pretty excellent when it was in overbought territory. It's starting to get more oversold now. There is a little MACD divergence here be aware of that. It's a little more interesting to me. Here's some individual names that we played. Sharper 98, Mux. Get a nice setup here off this trigger. Nice bounce last week, but if you didn't take some profits, it's pulled back the last couple days. Sharper 99, AU, same deal. This was an excellent buy off those. You had basically 3 doji candlesticks there. Very oversold. That was a nice trade off of that. And finally, Chart 100 KGC. This one is forming a coil. All right, guys, I'm not covering individual trade ideas in this newsletter. I did offer Tesla above, and again, we'll see what the old market does this week.